Good morning and happy Monday to you. You're watching All You Need to Know on Bloomberg Quint Live, and I'm Alex Matthew. First, the headlines this morning. Markets in Asia are off to a mixed start with focus shifting to corporate earnings. There are no signs of the US government shutdown ending, and that continues to weigh on investor sentiment. UK Prime Minister Theresa May's Brexit agreement faces a near certain defeat in the House of Commons when it votes on Tuesday. May said that blocking Brexit will be disastrous for the British economy. IT major Infosys raised its FY19 constant currency revenue growth guidance to 8.5 to 9% after it secured deals worth close to $1.5 billion in the third quarter. In order to meet its steep disinvestment targets, the Finance Ministry may consider selling part of its stake in Axis Bank and ITC that is held through the Specified Undertaking of Unit Trust of India, or SUTI, in the next few months, according to a ministry official. And Avenue Supermarts reported its slowest profit growth in nearly 8 quarters. Let's talk about that US market session on Friday. US stocks snapped their 5-day gaining streak to end the day marginally lower, but ended the week with gains. This comes in as concerns over ongoing government shutdown continued to mount. Treasuries rose while the dollar remained flat, heading for a week of declines for the 4th time now in a row. Abigail Doolittle of Bloomberg News wraps up Friday's Wall Street session in this report.
Stocks finished slightly lower in Friday's Wall Street session, but on the week, the Dow, the S&P 500, the Nasdaq all climbed. For the S&P 500, a third week in a row, the best winning streak for the S&P 500 going back to August. So 2019 is certainly starting out with a bit of a bullish charge. On Friday, muted to some degree with those small declines for the major averages. This had much to do with energy, oil dropping on the day, down 1.6%. Its first down day in 9, so that piece of the risk asset rally coming apart to some degree, and again dragging on the S&P 500 and the Dow more so. The worst sector for the S&P 500, down about 0.6%, leading the 7 sectors that traded lower. To the upside, 4 sectors did trade higher on Friday, led by healthcare. As for some of the big movers, Netflix really stood out up about 4% on multiple upgrades, including Raymond James. And since December 24th, the low for those shares, Netflix up an astounding more than 40%. This ahead of the fourth quarter report next week. Lots of investors, analysts, and traders expecting very solid results there, to say the least. GM also another big standout on the day, rallying by more than 6.5%. This after they unexpectedly boosted the fourth quarter earnings profit outlook. Plus, they're saying that 2019 looks like it could be a pretty good year. As for some of the drags on the day, standing out the most, some of the big tech names, including Apple, Microsoft, and Alphabet. Next week, of course, the heart of earnings season will kick off. Perhaps one bearish tell or cautionary note around earnings season kicking off. On Friday, the 10-year yield did drop quite a bit. That tells us Haven bonds rallied, price trading inverse to yield. Some investors seeking safety ahead of the start of earnings season. In New York, Abigail Doolittle, Bloomberg News.
Now, sticking with news on the US government shutdown has gone on for a record 23 days, and federal officials have now missed their first paycheck. Republican Senator Lindsey Graham suggested a partial reopening of the government, but the Democrats are standing firm. The Democrat Speaker of the House of Representatives continued to reject the funding for Trump's border wall. Here's a report by Ross Cranzi of Bloomberg News.
There's always a sense that President Trump will listen to the last person he spoke to and take guidance from that person, whoever it is. And if Lindsey is the last person to talk to him, maybe that's the case here. But as the senator himself said, it doesn't look like President Trump really wants to go down that road. Lindsey Graham also has a plan. He calls it Wall Plus, that it seems to be kind of similar to other more comprehensive immigration plans that have gone before and have faltered before, where there will be protections for the so-called dreamers in return for funding for the wall. But Democrats are pretty set and unwavering in their stance that open the government and then we can talk. And they say they're for border security, but they don't want the wall. So really, into the 4th week of the shutdown, there's not a lot of change in position. One thing that we don't know really is where Senate Majority Leader Mitch McConnell stands on all of this. There's a sense, probably on both sides of the aisle, that if McConnell were to really call for the Senate back into session and to vote on the funding bills that the Democratic-led House has passed, that would really force the issue. But he doesn't seem inclined to do that, even though opinion polls show that Republicans are getting the bulk of the blame. Now, for President Trump, he's been a little changing in his rhetoric over the weekend. Yesterday, he tweeted numerous times about a humanitarian crisis on the border, but today his tweets were much more hard-edged. They were really vintage 2015, talking about criminals and drugs flowing over the border. That, to me, suggests he's kind of dug in on his position.
All right, let's move on now. Theresa May enters one of the most challenging weeks of her leadership as the UK Parliament prepares to decide the fate of her Brexit deal and possibly her tenure as Prime Minister. Kathleen Hayes of Bloomberg News reports.
Stories over the weekend is there's a group of MPs, including from our own party, who are campaigning. In fact, they are Conservatives, campaigning to take over the Brexit deal if and when it is defeated, as probably tomorrow. This is a very important excerpt from the speech, and we know it is because her office released it. What if we found ourselves in a situation where Parliament tried to take the UK out of the EU in opposition to a Remain vote? People's faith in the democratic process and their politicians would suffer catastrophic harm. We all have a duty to implement the result of the referendum. And of course, a lot of people are wondering now that the British people know the cost of Brexit, how tough it can be, and it already has been on their economy, maybe a second referendum would have a different outcome. And of course, this warning comes after this Sunday Times report I was just telling you about, these lawmakers that are ready to seize control of Brexit. And in fact, cabinet ministers on Theresa May's side are pleading with them to please back the deal. Meanwhile, the Guardian talking about reporting on something that's already been discussed, which is the EU expecting a request from London to extend their March 29 deadline for its withdrawal from the union in coming weeks, assuming that the deal fails. Furthermore, we know that Labour has been looking at this, kind of skirting around this issue of a no confidence vote. Jeremy Corbyn, who's the head of the opposition party, the Labour Party, was on the BBC earlier. Here's what he said when asked about such a step.
But if she does lose that vote, do you immediately put down a vote of no confidence in the government?
We will table a motion of no confidence in the government at a time of our choosing, but it's going to be soon. Don't worry about that.
Of course, that leaves up in the air the question of a second referendum, doesn't it? But now a story from the Daily Telegraph. There's been so much going on the last few hours. A cross-party group of MPs will publish draft legislation proposing a second referendum on the UK's exit from the EU. The Telegraph reports, citing the members, including former Conservative Attorney General Dominic Grieve. Now, he was Attorney General from 2010 to 2014. He's been described as a liberal conservative because he has criticized Brexit, but there are other people joining with him, including the Liberal Democrat leader and others. So there's a lot going on at once. Everyone assuming, of course, that this vote now is going to fail on Tuesday.
All right, well, let's turn now to the markets and look at how the Asian markets have started the day. I'm joined live from the Hong Kong studio of Bloomberg by Rosalind Chin. Thanks so much for joining us, Rosalind. Good morning and happy Monday to you. How are the stocks looking this morning?
Well, we've got Japan closed from market holiday, so as you can imagine, we're losing a bit of volume there. So we've got the MSCI Asia Pacific right now kind of not doing a lot. It is in negative territory, but it's down by less than a fifth of 1%. And regionally, really, most of the major markets here are trading lower, including Hong Kong and Shanghai, which just opened a few moments ago. Really, the one that's kicking the trend is the Australian S&P ASX 200. That actually is making gains of just under a fifth of 1% there, with financials leading the gains. With banks, we've got the Commonwealth Bank, Australia and New Zealand Bank, NAB and also Westpac all making gains at this point in time, down under. Now, the rest of the region, we see that the Kospi here is losing over a third of 1% right now. SK Hynix has been leading those declines there. Last week was, in fact, the best for regional stocks since the beginning of November last year. There were signs of progress in the US-China trade talks, and there were some dovish comments from the Fed which kind of helped. This week, an absence of that, and we have data coming out. So we've got Chinese trade data coming out later at some point today, and that's expected to show that exports increased 6.6% in the month of December. So that widening trade gap there. The Chinese yuan appreciated 1.5% against the US dollar last week. Best week since April 2007. The December China data, of course, expecting to show those widening trade surplus numbers combined with last week's increase in FX reserves. So that is indicating there's some support there for the yuan. Yuan gains seen by some as a bit of a clue that the US-China trade talks have been going fairly well. Of course, we shall remain to see what those trade numbers actually show when they come out later today. A quick look at Australia. Well, I did mention that they were making gains there. And weighing on sentiment, really, as you mentioned, the Brexit vote, which is going to come on Tuesday in the UK, and of course, that partial US shutdown ongoing, and both sides with their feet firmly entrenched in their stances there. So that's how things look at this point. Back to you.
Thanks so much for that, Rosalind. Well, let's turn to India now. Agam Vakil is here to set you up for the day's trade and also to tell you what's happening in the futures and options space. Agam, I believe there's also updates from the commodity space. You can give us an entire picture as to how we're looking to start the week.
Sure. Let me start out with commodities, Alex. If we can break down the chart and see how these commodities are doing at this point, we do have Brent, which is hanging around the mark of 60.6 currently. It's advanced by around 0.2%. In terms of metals, again, we have some gains in gold. Of course, gold has been in focus recently given its price movements and the surge there. And of course, the spot gold are currently at around 1,291. It's looking at a little bit of an advance, building on the kind of gains that we saw in the previous few weeks. In the base metals, we don't have too much of movement except for nickel and lead, where we have seen continued traction. So some gains coming in there. But with that, let's shift focus to your equity markets, and bringing on the SGX Nifty, we have an advance of around 23 odd points. Coming down to your Nifty, what we're seeing is your Nifty 50 declining as much as 0.3% with the broad market indices falling in tandem with the benchmark indices, and the banking indices as well falling to some weakness in the Nifty PSU banking index. In terms of ADRs, we have an advance of as much as 5.5% for Infosys. Do remember that the company has upped its year-end guidance to around well over 8.5 to 9%. Vedanta and Wipro, along with Dr. Reddy, is also advancing. But in terms of others, we have weakness in Tata Motors, ICICI Bank and HDFC Bank clocking marginal losses. But when it comes to your foreign institutional flows, 687 odd crores on a net basis moving out from FIIs, and DIIs plow in another 123 crores. Very small numbers along with small gross numbers too. But your Nifty contribution currently, we do have ITC, HDFC and Infosys giving some amount of support, but TCS, Reliance Industries and L&T bearing down on the index. We're going to have to wait and watch as to how Infosys plays out, and considering it is a relatively heavier weighted company. And in terms of the futures and options space, unwinding continues, 3% decline in open interest. The Nifty banking futures also sees 3.7% decline in OI, coming down to your open interest distribution. In fact, this is the change. We're seeing unwinding in the 11,000 put, and more writing is at 10,900 and 11,000 calls. But moving on to your open interest distribution, we have 10,500 on the lower end. On the higher end, it's 11,000 based on maximum open interest. And we do have Adani Power and Jet Airways, which remain in the F&O ban. Watch out for Jet Airways. India volatility index remains unchanged. And we also have your Nifty PCR at around 1.39 against 1.46, with the Nifty banking put call ratio at around 0.9 versus 0.92. And in terms of stocks, we are keeping an eye on Arvind, where the decline of 1%, and Mindtree and Torrent Power are the other two which we are keeping an eye on. In terms of unwinding, let's pull up that list as well and see where there is substantial movement with respect to the likes of CESC or NMDC, where there has been short covering. So we'll be watching out for those as well, Alex.
All right, thanks so much for that, Agam. Well, let's talk about one of the points that Aga mentioned at the start of his trade setup. He's talking about crude. And one of the world's biggest oil producers, Oman, has called for the oil markets to stabilize around the $60 per barrel mark. Now, production cuts imposed by the OPEC and its allies have already caused oil prices to rebound from their bear market lows. James Thornhill of Bloomberg News filed this report earlier in the day.
Part of the reason for their optimism is that going into the second quarter is traditionally a time of year when demand for crude does pick up. So they're thinking that that will provide a bit of a floor for prices. The other factor to consider is that those US sanctions on Iran, the waivers that President Trump allowed for some countries to continue trading that oil, they will expire in the second quarter, which might also put a bit of upward pressure on prices. So as you say, there was the ENI CEO and Oman's oil minister both said they think $60 for crude is, market's going to stabilise around there in the coming months. And there certainly has been signs that those production cuts announced at the end of last year are starting to filter through to the market and stabilising prices around these levels.
And what are the risks to the crude rally then?
Well, the obvious risk is that demand that people are expecting to emerge doesn't materialise, or at least not to the extent that the producers are expecting. China growth concerns have been around, and that's caused well-documented stock market jitters. And who's to say we aren't going to get more of those, especially if trade talks with the US stutter. They seem to be going okay at the moment, but who knows what's going to happen there. The other important factor is the US shale producers continue to pump out production at record levels. So you'd think that will put a ceiling on the price. I mean, they don't want it to go too low either. And we had the Saudi oil minister say that his production cuts were actually helping US shale producers, which is true. But those production levels are quite high. So I think that's probably a factor which could put a lid on prices going forward.
All right, staying with the overarching topic of crude, UAE Energy Minister Suhail Al-Mazrouri believes that the 1.5-month production cuts imposed by OPEC and its allies will take care of balancing the oil markets going forward. Here's what he had to say.
The market is, or the analysts are a little bit jumpy when it comes to the decision and what would it do to the market. I mean, if we analyze the increase above the 5 years average, it was around 36 million barrels above the 5 years average. If you take the cut, 1.2 million barrels, you multiply it by 30 days, you're going to take care of it within 1 month. That's if you remove the other elements from the equation. So that's the reason of my of not being pessimistic about what we can do with this cut during the first quarter. People are I mean, the question, should we meet or for an extraordinary meeting? I think we only do that during emergencies, and there is no emergency.
Okay, but you're still in do whatever it takes mode. You would reassert that to the market. You are still in a do whatever it takes mode.
I think what we did is do what it takes. We believe that the 1.2 was well studied. We think it will take care of the market.
Okay.
And the reason we made it for 6 months is that we don't want to overdo it. We think that 6 months is enough, and probably maybe in the first quarter we can correct the market, and then we will see what happens and act accordingly.
All right, now let's see what's making headlines across the globe. Sue Keenan of Bloomberg News brings us all the first word headlines.
Theresa May will warn in a speech later Monday that the UK Parliament will kill Brexit if her deal is voted down this week as expected. The Prime Minister will say that such a scenario would be catastrophic for democracy. The Sunday Times says some lawmakers are planning to seize control of the legislative agenda to allow Parliament to extend the March 29th Brexit deadline or even overturn the decision to leave the EU. In Greece, the government is unraveling, prompting the prime minister to call a confidence vote that could trigger an early election. The defense minister has withdrawn his party from the ruling coalition in the euro area's latest sign of political instability. Lawmakers in Athens are tentatively planning a confidence vote on Wednesday that could end the left's 4 years in power. In the U.S., President Trump has tweeted that the U.S. military has begun to withdraw from Syria, something he says is long overdue. He says there's little left of the so-called Islamic State, but what there is will be hit by attacks from an existing American base if it tries to reform. He added that he would, quote, devastate Turkey economically if President Erdogan carries out his threat to strike at Kurdish forces in Syria. And the wife of detained former Nissan chairman Carlos Ghosn has attacked what she calls the harsh treatment of her husband in a Tokyo jail, saying he's been repeatedly interrogated with no lawyer present. Carol Ghosn wrote to Human Rights Watch, saying her husband has only limited opportunity to confer with his legal team and has lost 7 kilograms in 8 weeks behind bars. Global news 24 hours a day on air and at TikTok, on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Sue Keenan. This is Bloomberg.
Well, Infosys announced its earnings, and what we've seen with respect to earnings is some surprises coming through. I'm going to start off with the guidance, where the company has increased its upper end of the guidance. In fact, it's increased it to around 8.5 to 9%, as against earlier expectations of around 6 to 8% for the full year of FY19. Moving on to your earnings, your revenues did rise around 2.3%, which was largely in line with street expectations. Perhaps the negative surprise coming in on the margins front, where margins did contract, but according to the management, the reason for the 110 basis points contraction as against an expectation of just about a 20 basis points contraction is because of depreciation provided for Panava and Scava, certain acquisitions, compensation increases, and continued investments. On the other hand, the company also had certain currency benefits along with lower lease, which played in favor of that. Now, coming down to perhaps the big announcement with respect to buyback, the company has announced a buyback at around 800 rupees per share, which is at a 17% premium to Friday's closing market price, and the buyback will be worth around 8,260 odd crores. The company will also shell out an additional 2,100 crores in special dividends as the company has taken it up. Well, finally talking about some key verticals, Infosys has actually done much better in comparison to TCS with respect to sequential growth this quarter for its largest vertical, that is the banking and financial services vertical, where it saw an uptick of around 3.6%, and that's followed by something like retail, which actually contracted for this quarter sequentially. In terms of key geographies, again, North America seeing an up move on, or rather an uptick of around 2.6%, followed by Europe seeing an uptick of around 3.8%. So strength coming in certain important geographies for Infosys. On the whole, while the earnings are not as great, the investors will certainly take heart in the upping of the guidance, as well as positive cues coming in with respect to the buyback.
Many of our segments are growing well. So you saw the performance numbers we shared for manufacturing, energy resource utilities, financial services. But across the board, we have a strong pipeline and or deal wins in all of our segments. So we feel confident for this full year, fiscal 19, that is giving us the ability to talk about increasing the guidance. We also see strong wins in digital. So our digital growth is over 30%. Also, our core services is growing, and which is where we think we make a real difference in the market, because we have an extremely competitive offer. We have a lot of artificial intelligence we've put into this. We're using our NIA platform in all of the work that we're doing, and that's attractive for our clients. So in the way we're looking at it, our segments are doing well. Both of our main digital and core services are doing well, and that's giving us some confidence for the guidance for revenue. We are not making any more qualifying comments on the margin in terms of where it's ending in the range. So it's still 22 to 24, and we are comfortable that that's where it's going to end. The margin that we've put in this quarter, or we've achieved in this quarter, is primarily from the planned investments that we've had and the one-off that Jayesh mentioned. So it's something that we worked towards in making sure that we build our digital capability for the future, and this is how we want to do it. It's got nothing to do with a one-off impact in the quarter that suddenly happened because of some deals.
Well, a bunch of news that you're tracking this morning. I'm going to start off with earnings first. J&K Bank, which has reported mixed set of numbers. NII is up by 13% year-on-year basis for this company at a number of around 882 crore. Net profitability of the bank has gone up by 43%. However, if you look at the net GNPA, that has increased to 9.94 as compared to a figure of 9% that we've seen sequentially. Tata Sponge Iron, high raw material costs along with other expenses and employee costs have weighed on the earning of the company. Top line growth, we're looking at a 22% uptick there, but then the margins of the company have come down to 11.6% as compared to nearly 22.4% seen in the corresponding quarter of the previous year. Avenue Supermarts, where the profitability growth has been the lowest in at least 8 quarters. If you look at the revenue front, we're looking at a 33% growth there to a number of around 5,451 crore. EBITDA too has risen by as much as 7.5%. Margins, however, have contracted to 8.3% as compared to 10.3%, and we've seen the net profitability up by as much as just 2%. If you look at the fourth set of number that we're tracking, GNA Axles, where the revenue has shot up by the company by as much as 47%. EBITDA growth too stands at a healthy number of 45%. And on account of which we've seen the bottom line performance of the company to above that 40% number. Well, in terms of the news, Bharti Airtel has reduced the stake in Tanzania unit to around 51% as compared to 60%. Now remember, this comes after a month of negotiations with government, where the government had accused the company of acquiring the initial shareholding shares of this company illegally. KNR Construction, which has received a financial closure yet again for a bid project, which is for Tamil Nadu and Andhra Pradesh, worth around 22,121 crore. And lastly, we're looking at IL&FS Engineering and Construction Company, where Gujarat Metro Rail Corporation has terminated contract with the company, citing the reason of slow progress, and has encashed, it said that may encash the bank guarantee provided by the company, amounting to the tune of 37 crore rupees. Now remember, this is the third contract that has been terminated for the company in a span of nearly a month now.
Thanks so much for that, Nikki. Let's also talk about some of the stories you'll find if you log on to the website bloombergquint.com, and well, you'll also find all the live market action right here on Bloomberg Quint Live. But let's talk about some of those stories. Bihar Deputy Chief Minister Sushil Modi will head a 7-member committee to study the revenue shortfall being faced by states after the GST rollout and suggest steps for augmenting collections. And China's largest technology company, Huawei Technologies, has fired a sales director arrested in Poland on suspicion of espionage. The telecom giant moved quickly to distance itself from a case that may crystallize fears that the company helps China spy on Western governments. Huawei said that the incident brought it into disrepute without elaborating. That's all we have for you in this edition of All You Need to Know. Do stay tuned, though. A lot more coming up very shortly. This is Bloomberg Quint.